Hello everyone, this is CA Isha Agarwal and today we are going to learn about Essay 200. So it is usually said that before starting upon any other essay, you should refer to Essay 200 because it creates a base for audit. That is, it helps you know all the basic questions that or basic doubts that you have in mind for audit, be it what is the objective of auditor or what is the scope of audit, what are the inherent limitations involved in audit, what are the advantages of audit, what are the qualities to be expected in auditor, whether audit is mandatory, or in which class of the company is the audit is mandatory, what kind of assurance that auditor provide. So yeah, these all basic doubts that you have in mind before continuing or before studying audits, Essay 200 helps you know all of these. One of the most important topics involved in Essay 200 is objective of auditor. So yes, first we study what is the objective of auditor and then continue with the other topics. So we'll break down each and every word of the line of this objective of auditor because as I said, objective of auditor is very important to know. As you're studying the further chapters, you will see that audit procedures are being applied, audit documentation is required to be maintained, what kind of pre-documentation, pre-preparation is required, what kind of the post-preparation is required. You will understand all of these only when you understand what is the objective of auditor. फॉर सपोज लेट्स टेक एन एग्जाम्पल कि आपको बस बोल दिया है सीए एग्जाम्स देने इरिस्पेक्टिव आपको बताया है कि क्या करना है क्यों देना है सीए एग्जाम्स एंड यू जस्ट सेट टू स्टडी एंड गिव द एग्जाम आप कभी भी उसमें एक्सेल नहीं कर पाओगे बिकॉज वंस यू डोंट नो योर मोटिव यू डोंट नो व्हाट पाथवे टू फॉलो हाउ टू स्टडी हाउ टू कंटिन्यू विथ इट which mat to refer or which videos to watch or how should I do self study or not. So yeah, it is very important to know the motive of anything before applying any procedures on it. So yes, the objective of auditor is very important to know before you study the other standards, wherein the audit application, audit procedures application, audit planning application, audit documentation application is mentioned. So objective of auditor is basically divided into two parts. First says the objective of the auditor is to obtain reasonable assurance that FS is free from material misstatements, whether due to fraud or error, and to report and communicate upon this as provided under applicable standards on auditing. First objective, to obtain reasonable assurance that financial statements are free from material misstatements, whether due to fraud or error. So we'll take one by one what are the words to be understood. First is to obtain reasonable assurance. Now, what is reasonable assurance and how does it differ from absolute assurance? So, absolute assurance is a kind of guarantee. It's a 100% guarantee that the auditor is giving that nothing in the financial statements is wrong. That is, he is certifying and he has verified each and every extent of it. Not even a rounding of error or not even a figure differs by 1 or 2 points or 1 or 2 numbers. So yeah, basically absolute assurance is 100% guarantee that the financial statements are correct and no one can point out a mistake on that. But no, auditor has the shield and has the power to give reasonable assurance. What is reasonable assurance? Reasonable assurance is basically said to be a high level of assurance but not total assurance. Why so? Because there are certain limitations of audit that limit the auditor to provide reasonable assurance and which limit the auditor to provide limit the auditor to not provide absolute assurance. For suppose an auditor has limited time, he cannot check each and every transaction of the clients. He can just do a sample testing. There could be a possibility there is an error in the items left which has not been included in the sample in his sample. So yeah, there is a possibility that auditor may miss out on something. So that is why the power given to an auditor is to provide reasonable assurance. Now, whether the auditor can misuse the word reasonable assurance, that is, he misses out on areas and says that he'll provide 50% assurance or he'll provide 60% assurance. Let's check some areas and leave some areas. Is it possible? No, it's not possible. Reasonable assurance in certain textbooks are defined to be 99% of the assurance. The only shield given to auditor is reasonable assurance because of limitations of auditing. Otherwise, he would have been expected to provide 100% of the assurance. Now, whether reasonable assurance is okay for the financial statements to be correct, or should absolute assurance only be demanded? No, reasonable assurance is a high level of assurance, and you cannot generally expect financial statements to be that wrong, or you cannot expect grave errors in the financial statements. So yeah, reasonable assurance basically means that there could be slight errors in the financial statement, maybe by 1 or 2%, or maybe in certain techniques, or maybe anything which does not affect the users of the financial statement. That is, the financial statements are correct to the extent that users can take the decisions. It doesn't mold the decisions of the users of the financial statements. So next was reasonable assurance that financial statements are free from material misstatements. Now, what does the word material misstatements mean? Misstatements are basically mistakes. That is, बहुत सारी गलतियां होती है फाइनेंशियल स्टेटमेंट्स में, मे बी ओमिशन की गलतियां हैं, या फिर मे बी कोई गलत एप्लीकेशन गलतियां हैं, कैलकुलेशन गलतियां हैं, छोटी छोटी गलतियां, इट्स ओके. मटेरियल में स्टेटमेंट्स मीन कि कोई गलती इतनी बड़ी है फाइनेंशियल स्टेटमेंट में that it affects the users of the financial statement. That is, for suppose आपका financial statement is not showing the true view. One example of this would be your financial statements are overstated, or your financial statements are understated. That is, suppose आपके company के debtors are 1 crore to 2 crore, but you're only showing them as 20 lakhs in the financial statements. What would the users expect? The company has been doing great operationally, the working capital of the company is great, that they are able to recover money from debtors regularly. But what is the actual scenario? The company has a lot of debtors stuck. So yeah, इतनी बड़ी गलती नहीं होनी चाहिए कि यूजर्स का जो डिसीजंस है वो आपकी वजह से बदल जाए, या जो यूजर्स जो डिसीजंस लेने वाले हैं वो प्रॉपरली नहीं ले पाए. Auditor has to assure at least these of the things, that no such grave errors are still present in audited financial statements. Or there could be an example that there are certain omission errors, but the omission errors in total are so much big that they have manipulated a figure maybe 30 or 40%. So ये सब नहीं होना चाहिए, and auditor should make sure that. Next comes whether due to fraud or error. That is, जो material misstatements है वो किसी भी वजह से नहीं होना चाहिए, be it fraud or be it error. अगर fraud है, if management is conducting a is have doing a fraud, or employee is doing a fraud, auditor should find out that through his audit procedure. If he is unable to find out, but he still suspects there's a fraud going on, he should write that in the opinion. He should tell it to the users of financial statements, so that even they know what's going actually in the company. Or if he finds out, he should communicate to the management and ask them to take the corrective actions. So yeah, and if there is certain error, or he has found certain calculative error, or certain application error, or certain accounting error, he should get that corrected before the audited financial statements are published. This was the first objective. The next objective was to report and communicate as per applicable standards on auditing. That is, once you are done with audit, your job is just not over. Your job is over once you have published and reported it to the stakeholders of the company, because the primary objective of audit and the primary motive of the audit is to enhance the degree of confidence of users of the financial statement. Who are the users of financial statement? They're basically the stakeholders. So yeah, once you have done the audit, you need to report them, because they won't come to see कि आपने क्या planning की है, क्या procedures की है, क्या documentation. No, they are just concerned with the audit report. So it's very important, once you are done with the audit, to publish. Once you are done with the audit, you need to publish the audit report, so that even the users can get to know what all audit findings you have got, how had the management reacted, whether the financial statements are true and showing the actual picture of the company, or they are material misstatement, they need to be corrected, whether the financial statements are clean, or whether the company is operating nicely, whether there's a fraud going on. So all of these need to be known to the stakeholders, and these all get known to the stakeholders only through the audit report. So yes, audit's end part is the audit report. If you're not publishing an audit report, no one is getting to know what audit you have conducted, and basically no one is going to believe that you have got an audit conducted, or you have worked upon certain company, because to them the only documentation available is audit report. So yeah, these were the objectives of auditor. I hope I made it clear to you. And always remember these two lines and try to recall it as much as possible, because this line will help you, and this understanding would help you a lot in the further coming standards on auditing. So now that we are done with the objective of auditor, the next topic that we come to is scope of audit. Now, what is scope of audit? Does the auditor need to do every work that is happening in the company that is something in which he is not competent enough, or something if he does not have the knowledge of, or certain legal matters in which he is not accomplished, or there is certain other criteria, maybe suppose कि कुछ valuation करना है but the auditor is not excelled in that field, or there is certain actuarial valuation, should an auditor do that also, और या फिर कोई legal matters हैं जिसमें company secretary की sign लगेगी, but the auditor will say no, should I could get that conducted too, or there is an investigation needed in the company, but the auditor will come forward and do that also. Whether the auditor is expected to do all these or not, that we'll understand in the scope of audit. So scope of audit basically tells us about 4 points. The first comes to that the auditor should ensure that all the financial information has been properly disclosed. That is, the auditor should ensure that the financial statements are being prepared with applicable financial reporting framework. Now, what is financial reporting framework? Financial reporting framework is basically AS or Ind AS that is applicable to the company. So the auditor is expected to ensure that the financial statements are made as per the financial reporting framework, that is whatever the AS or Ind AS has prescribed for the class of company, or whatever the accounting policies that should be applicable to the company, or whatever accounting standards that should be applicable to the company have been followed, and there have been proper display of information. So display of information is usually governed by Schedule 3, and Schedule 3 has demarcated and ask the companies to display the information in such a way that it is very easy for the users to understand. If the company deviates from Schedule 3, the only problem is that the users of the financial statement may not be able to comprehend. One example of this could be, as Schedule 3 states, whenever you are displaying assets, you should display it in in fixed assets, intangible assets, and capital work in progress. But if the company deviates from this format and just show that the assets of the company is 100 crores and not demarcates into three other criteria, so how will the users understand that how much the company has the fixed assets, how much the company has intangible assets, and how much the company has capital work in progress? So all the disclosures by Schedule 3 are provided in such a way that the financial information should be displayed more clearly, and it should be more understandable to the users. See, auditors should ensure that the financial information is displayed in such a way that it is more user friendly, and even if they are deviating from the financial reporting framework, it should be because of better presentation, not because of to save some time or to save some hard work in the financial statements. No, it should be better. It should be for the better transparency of users. If this is so, they should write the reason and let the users know that this has been done to improve the transparency of financial statements. So yeah, first is the auditor should ensure that the proper information has been disclosed in financial statement. The next is auditor should ensure that all the supporting documents and books of accounts on the basis of which financial statements are prepared are reliable and sufficient. Now, what does this mean? For suppose in today's world, generally companies run on software. So once the auditor is checking, for example, an area called sales, the auditor should ensure that once he is verifying sales, the sales register present in the software, the sales register that is present in the hard copy, if there is an in-on register with the company, or if any third register with the company, all of this should match, and all of this should match with books of accounts also. It should not be that the sales register is showing 80 crore sales while the accounts are showing 120 crore sales. This simply shows a fraud from the company. All of the books of accounts that are prepared and the supporting documents to the books of accounts should match. It should not be that there is a mismatch between both of these and the auditor is unable to understand, or the auditor is not able to reconcile both of them. So yeah, all of this should be, if these are not reconciled with the books of accounts, this simply shows that the books of accounts are unreliable. That is, the books of accounts are not trustworthy. When the books of accounts itself are not matching with the registers or with the documents present in the company, how do the users trust the financial statements of the company? So the company should always make sure that the books of accounts are reliable and the supporting documents are reconciled with the books of accounts, so that even the auditor can trust and verify that the books of accounts has been prepared nicely. Further, the supporting documents as well as the books of accounts should have sufficient information. That is, if I am checking the sales register, it should have from A to Z of sales, be the customer name, customer number, customer GST number, customer address, the tracking number, the transporter name, the transporter's number, the truck number, the lorry number, the consignment note, the invoice number, the sales order number, like from which point the sales started to which point the sales ended. The sales register should have everything in order to be sufficient enough to be checked. So yeah, all the supporting documents and other items on the basis of which books of accounts are prepared should be reliable and sufficient. Next point comes that the auditor should ensure that all the aspects of the enterprise is covered in the audit. That is, he should plan the audit in such a way that all of the areas he is able to check. Audit should not be planned in such a way that I am allocating 20 hours to one area and not even 20 minutes to the other area. Yes, some areas require many more working hours than other areas. Some areas may require less working hours. All of this depends on materiality, risk criteria, and other things. But yes, you should plan audit in such a way that you are allotting at least some time to each area. It should not be such that you feel that the area is very easy, the company would not have made a mistake, so I'll not check that area only. No, this is a very big mistake, because you never know that the area you have missed may have a mistake, and the reasonable assurance that you are providing, that is, you have checked each and every area of the financial statement. The reasonable assurance, as I said, is only because yes, you could have missed some percentage, but you cannot say that I have missed 100% of that area. So your audit should always be planned in such a way, and area should be hours should be allotted to each area in such a way that some hours are allotted to each of the area, and each areas get the preference as per their materiality and risk criteria, and no area is missed. The last comes, the auditor is expected to do nothing outside his domain. The first question that I asked while starting the scope of audit, whether the auditor is supposed to do everything, if there's an actuarial valuation, or if there's a legal information that has to be uh, given, or if there's a due diligence or investigation where the auditor is expected to do all this. No, the auditor is not expected to do anything which is outside his domain. Obviously, an example could be when the company is having employee liability, gratuity, leave encashment. Yes, the actuary has to do the actuarial valuation. The auditor can, yes, of course, check the data that has been given to the or actuary, or check the GSEC rate that has been employed by the actuary, or whether there's some mortality table that he can see whether it's up to date, or whether it's as per the company or not, or maybe the retirement rate or attrition rate. All of this can be seen and verified by the auditor, but the actuarial valuation can never be verified by the auditor, because he is not competent enough to check the actuarial valuation. He is competent enough to check the data and is responsible for that only, and not nothing beyond that. So yes, the auditor is expected to do nothing beyond his scope, that is nothing beyond his domain. And I, as a client, should never expect him to do so also. Whatever financial information and financial statements are to be reported, the auditor is supposed to stick to that only and check whether all the information has been displayed correctly, and whatever and whichever till extent he is competent enough to check the financial statements, he may do so. So now that we are done with the objectives and scope of an auditor, we'll understand the inherent limitations that limit him to provide a reasonable assurance and not absolute assurance. So first limitation of auditing has to be the nature of financial reporting. So as we all know, preparation of financial reporting involves certain judgments and certain estimations by management. So now here and there could be a possibility that management's judgment is not reasonable in the eyes of auditor, because judgment, as we all know, differ from individual to individual. So it could be a possibility that some judgment as per management is okay but not as per auditor. An example of this could be many Indias, as we all know, give you the option to deploy any of the 4 or 5 methods, because in case of depreciation, as you know, if the company is applying a straight line method of depreciation, even in straight line method of depreciation, there are various methods that can be employed upon, be it on the basis of production, or on the basis of years, or on the basis of something else. So yeah, it is upon the company's discretion, which may, as per the auditor, be not reasonable, but which, as per the management, is reasonable enough to be deployed. So yeah, in these kinds, auditor cannot assure that yes, the PP being displayed is correct or not, because from his point of view, he feels he is not correct. But at the same time, he can just explain his view to the management and can ask their reasonability basis, but he cannot go to the management and ask them to change the method, because the discretion of the method has been allowed by NDS itself. So herein he cannot give an absolute assurance, because as per his opinion the PP is not correct, but as per the client's opinion the PP is correct. So there's not 100% clarity in case of judgments or estimations applications, be it in case of provisions or contingent liabilities, or I will say different methods of depreciation, different methods of inventory valuation. Be suppose the company is applying FIFO or the company is applying weighted average, the auditor can suggest his point of view but not force his point of view on the company, because as per Ind AS they have the discretion. So yeah, in this case the auditor is not expected to provide absolute assurance, because as I said in the starting also, judgments differ from individual to individual. So yeah, his judgment could be different from the management, but he cannot change their method. So herein he cannot assure to the users that it is correct or not, because as per his point of view it is wrong, but at the same time even the client is not deploying any wrong method. He is just choosing another method. Next comes the nature of audit procedures. So audit, as we all know, has certain practical and legal limitations. That is, auditor has to manage both time and cost. He cannot spend, for suppose he has spent more than 6 months doing statutory audit of one company. No, he cannot do that, because even he has not been uh, given fees of such long hours. Even the client wants the work on time, and even he wants the audit to be conducted in such a way that he can deliver to the client, deliver value to the client in the most cost efficient way. So yeah, he has to manage both time and cost, and therefore he applies certain audit procedures which require him to check only certain parts, or which require him to check on the sample basis and not 100% verification, which is why, as I said in starting also, which is why he cannot absolutely assure that it is correct, because there could be a possibility that the things he has left in sampling have errors in them. Next possibility could be management may not be providing data to the auditor. If the auditor is not provided with the data only, what would he check? At the most, he will give a disclaimer of opinion, but he cannot give any other opinion because he has no data to check only. Disclaimer of opinion obviously will create a doubt in the minds of shareholders, stakeholders, but even they wouldn't know what is actually happening in the company because no data was provided. Further, there could be a possibility that management is involved in the fraud. In that case, they won't be giving the data anymore also, or if they have given the data and auditor has found out something, they would make up a story in that also and present it to the auditors. Had it been an employee fraud, the auditor would have verified and checked again with the management also. He could have sat with the management and even they could have drawn flaws. But if the management itself is involved in the fraud, from whom will we whom he'll from whom will he third verify or cross check that whether management is wrong or not? So yeah, this could be a possibility. And last is generally related party transactions. The auditor, as I said, has legal limitations too. So he cannot go and check whether each related party exists or not, or he cannot call up each and every related party that whether they exist or not, or how are they related to the company, or if there are just some related party being treated as the normal customers. So related party transactions are generally beyond the scope of auditor, and he cannot do so. So yeah, even if some related party transactions are just on the paper, or just or related party transactions are involved in the normal transactions also, the auditor would never be able to know that. So yeah, these were some of the flaws of the nature of audit procedures. Next comes audit is not in the nature of investigation. That is, as auditor can dig at a point only to some extent. Beyond some extent, even he does not have the authority or the powers. For suppose if he feels that this customer has been given a lot of orders in the year, should I go and check on him, or should I go and actually verify with him whether these sales orders were delivered to him, or whether he has booked these sales orders? But no, auditor does not have all these rights. Most to most, he can get a confirmation from the customers, but nothing beyond that. So yeah, investigation has the power to do all this, but audit does not, so which restricts him to provide an absolute assurance in this case. Next comes future events. Future events are not known to the company as well as auditors. So what happens in the future, even the auditors does not know. So auditor cannot assure that yes, the company would be growing in the years and years, and the company would be a $1 trillion company in 10 years, or the company will expand to here and here in the future years. No, the auditor cannot assure all of these, because no one has seen the future, and there could be any future contingency, be it a geopolitical change, or any political change, or any market scenario change. There could be any possibility. So so the auditor is not expected to assure anything of the future events, and thereby cannot assure also that if the company has prepared a projected financials, whether it's true or not. No, he cannot assure. So because when he himself does not know what the future events be happening, how can he assure something of that kind? And the last comes timeliness of the audit evidence. So yes, generally it is so that the auditor is appointed for 5 years. So it could be so that he has taken an agreement in the first year, and he expects that he won't take that agreement in the second year and third year once again, because once he has taken the agreement, that has fulfilled his part. Next year again, he can just check the agreement and that's it. But there could be a possibility that there's a change in the agreement, and the audit and the client has not communicated that to the auditor. So auditor would be still relying upon the previous evidence, uh, but has not got the updated evidence. So yeah, even the relevance of the audit evidences decrease over time, and this could not be said as a wrongdoing of the auditor also, because he thinks that the audit evidence he has achieved in the first year, and that agreement is for the 5 years, that agreement won't change. But the agreement changes subsequently, and even the client does not let him know. So yeah, there's a decrease in the reliability of audit evidence that has been achieved in the first year. See, even there he cannot provide assurance, and if the client does not provide him the updated agreement saying that I have provided you the agreement back then there's more problem. So yeah, even this becomes a criteria for not him providing absolute assurance. These were the inherent limitations of the audit. Next, we'll study what are the advantages of audit. So as I said, SA 200 also teaches you a certain other miscellaneous topics, one of which is whether audit is mandatory or voluntary. So it is usually mandatory for only companies, but other different kinds of entities can also get their books audited voluntarily. I have created a short on this separately, so you can refer that also, which kinds of entity can get their books audited. But yes, the other kinds of entity generally get their books audited because of the large benefits of audit. So what are the benefits of audit? Firstly, we'll come from person to person and entity to entity. The first benefit is obviously to the clients. They can get their financial statements absolutely corrected, clean, free of misstatements, which would be a great help to them also. Because if they are displaying the true and actual position of the company, they are gaining users' trust. They are gaining the confidence while getting the loans or subsidies from the government. They are gaining confidence from every external person to the company. So yeah, if the financial statements are correct, it is of huge benefit to the client itself. Next comes what is the benefit to the government. Because the finance statements of the books are, of the entities are audited, the government can trust them with the profit actually shown, and thereby it helps them in tax calculation, or if there is a tax evasion, they can get uh, they can observe that, or they can check that. Why? Because once they see that the profit and loss of the company has been audited, they are they expect the company to provide the tax computation to them also. And once they are sure that an auditor has verified the tax computation, this helps them make the tax process very hassle free. So even government trusts you more with the audited financial statements. For banks, generally when the banks are providing loans, they ask for the audited financial statement. Why? Because they think when the financial statements are audited by a third independent party, they can trust your company, and as per financial statements, they can uh, get to know about your credibility, and they can estimate by when can you repay their loan and accordingly provide you a loan. Further, it serves as a check on the morale of the employees. The employees usually fear to do any fraud because they have the fear to get caught in the audit. So yeah, even the employees have this in mind that they do not do any fraud, because if they do, they can get caught in audit, which can make them lose their jobs. So yeah, it helps the company from such losses also. Further, even the management acts very nicely and uh, works and supervises very nicely, because they have this fear that once the auditors report that the internal controls of the companies are weak, they ultimately have to answer the shareholders. So yeah, even the audit fear helps the management to work efficiently. So these were some of the advantages of audit, but the advantages of audit are much more beyond this, and any entity getting their books audited would be in benefit only. So next comes, what are the qualities of the auditor? The qualities of the auditor that you can expect is he should be competent enough. That is, he should have optimum knowledge of auditing and accounting. Further, he should be a questioning mind. He should have professional skepticism in him. He should be professionally behaved. That is, he should not be too close, too rude, or too soft spoken, because being too soft spoken can arise threats for him only, and being too rude cannot fetch him any may not fetch him any data from the client. So yeah, he should have a professional behavior so that he does not develop any threats in mind. Also, there is a very famous London General Bank case in which the verdict was passed that the auditor is expected to assure any or expected to provide assurance to any entity or any document only when he is himself sure that the books are correct. If not, he should not certify them. That is, once he is assured that the books of accounts are correct, then itself he should provide his audit opinion or audit report. If he does not feel that the books of accounts are correct, or if he feels that the books of accounts are showing a false picture, he should not certify them as correct. So yeah, these were the qualities of the auditor that uh, an entity can expect from the auditor. Lastly comes certain miscellaneous topics. That is, as I said, first comes whether audit is voluntary or compulsory. Audit is compulsory for all the companies, but certain different kinds of entity may get their books audited depending on the criteria, or they may get the books audited voluntarily also. Then comes what kind of assurance is provided by audit. Audit provides a reasonable assurance criteria, which is not absolute assurance but a high level of assurance. What are the other different types of assurances? Generally, there are three types of assurance. First is the reasonable assurance, of which an example is audit. Next is the limited assurance, of which the example could be could be review. That is, it has limited assurance engagement, requires little work, and does not require more of the supervision and everything, and more of detailed planning and everything. And lastly, assurance is about future projects, that is about future projection. It requires even more low level of assurance, because even the auditor does not know what would the future events be. So yeah, auditor cannot provide high level of assurance in that case. Thank you. I hope I could provide you some learning from this. And also, if you're watching this video just before the exams, you can watch it at 1.5x. This video is still understandable, and this video would help you save time. watching at 1.5x just before the exams. Thank you.